Hello, everybody. Welcome to the Fundamental Analysis webinar this evening. My name is Troy. I'll be leading the session for AvaTrade. As we get going, let's do a quick systems check. If you would, type OK in the chat box and let me know that you're hearing me clearly and seeing the screen all right. All right, great. I've got enough responses. Thank you. Looks like we're up and running fine. If anyone runs into any issues, just let me know. So we'll be looking obviously at fundamental news before we get on the charts to look at trade opportunities that would fit the news that we look at. The news is pretty US centric right now in terms of the fundamental news, with the Biden inauguration coming up and stimulus being talked about and a new administration coming in. So it's mostly what we're looking at fundamentally in terms of what's moving the markets. There are a couple other things going on that we can take a look at as well. As we get going, keep in mind, and I think we all understand this, that there's risk with each and every trade. No one trade is guaranteed to profit. Each and every trade could bring losses, but obviously the other flip side of that is each and every trade has a good potential for profit. And if you risk manage in a way that makes sense for your strategy, for your risk tolerance, there's no reason why with the right entry points and exit points, you can't come out on top. So risk management is obviously important. You can use stop loss marks, hedge positions, AvaProtect, which is available on our web trader platform and our mobile app. It's a unique way to manage risk. So we'll take a quick peek at that as well, maybe. And so in some way, think about managing your risk. As we go over concepts in the session today, keep in mind that it's coming from an educational perspective and not meant to be taken as financial advisement. Now, what is fundamental analysis? Basically, it's looking at the news, looking at the big stories, the big headlines, what's going on in the world, what are the latest jobs numbers, earnings reports, etc. Okay, and it is earnings season, and some of the big banks are moving today on the charts, and we'll take a quick peek as to why. And could be some opportunities there as well. So one type of fundamental news would be that type of news. Economic numbers, such as factory production numbers, GDP numbers, or earnings releases, things that are scheduled at a specific time on a specific day for a specific instrument. That's the type of fundamental news that, in terms of scope and timing, you can account for a little easier. And we'll take a look at a couple types of what we call regular economic events in just a moment, and maybe look at a few instruments that might be interesting to trade on related to that news. The other type of fundamental news would be extraordinary news, like the COVID situation, not as much anymore, but the Brexit situation was, constant headlines months ago where you didn't know what the next breaking news was going to be or exactly when the headline might come. More recently, it's obviously been about the pandemic and vaccine distribution and new outbreaks. That type of extraordinary economic news, you just don't know when it will come or what the headline will be. And so that also is something that you can prepare for, mostly with pending orders, to get in on movements that you don't know if they'll occur, but if they do, you get in for the ride. And at strategic locations on the charts, just beyond a support level or resistance level that you deem significant, then you're waiting for big news to break those levels. And then you get in regardless of what caused the movement. Whatever breaking news caused it, you can get in on the movement. And so there are ways to handle and trade with both types of fundamental news. And so we'll go over some ideas on that in just a moment. So as we go along, feel free to ask questions. I know some of you are new to trading. You might not really have much of any idea about strategies and concepts and candlestick charts. It's okay. A number of you also, I know, are seasoned traders, and you're coming for some advanced information, maybe strategy concepts, something to help you out with your strategies, and I think it'll be useful for you as well. Yes, good question. The question was, can you watch this webinar after it's over? And the answer is yes. Not directly after, but by tomorrow, typically by the next morning, the next business day, the webinars are uploaded to our YouTube channel. And there's a specific section for English webinars. And so you'll find all of the past weeks and months of webinars already there. And this one is no exception. It will also be there by tomorrow, uploaded. Okay, so let's take a look then and see what is happening in the markets. Now, first, I mentioned AvaProtect. And so, and we spoke a little bit about risk management. So I want to make sure you understand trading platforms on our main website. Go to AvaTrade Go. There's our app. You can get it from either app store, and it's got all the risk management stuff that I'll show you on our web trader platform. It's also on the app. You see AvaProtect, you see advanced tools for programming take profit and stop loss that calculate your risk for you and your potential profit. All of that's on our app. It's also on our web trader that we're about to take a quick peek at before we get into the fundamental news. If you don't have the web trader active on your account, probably you've been with us longer and the web trader wasn't up and running till about 6 months, a year ago. So if you're a longtime client with us, you might not have the web trader active on your account. Ask our support, ask your account manager, and we'll get it active. To go to the web trader, you just log in from here. Click log in and you're in this location, okay? And it might look different if you expand the chart. You can slide it up or go full screen on the chart. And you've got different lists, favorite lists, most rising, most falling, etc. by category, or you can just search with the search tool to find what you're looking for. Real quick, what I wanted to show you is if we go to gold, and maybe you think, okay, gold has dropped enough. I think it'll go back up to 1900, whatever the case may be. So if let's say you want to buy on gold, and you start to take a look and you say, well, you know, I want at least 10 ounces. That's 0.1 lot. Tells me my margin requirement right here. So that makes it simple for you, converted to your account currency. You know, if I say, okay, stop loss, you know, maybe I want to get it down under 1800 or something. So 1790. And I take a look and I say, whoa, I'm risking over 500 with that trade size to that stop loss, $500. But maybe I expect potential big movement through the inauguration in the US with Biden being sworn in and his cabinets being picked. And I think there could maybe be a lot of volatility. Maybe some violence stirs up in the US or something, hopefully not. But maybe you think there's a good potential for gold to have big swings. And you hope it swings the right way, but you look and you say, you know, this stop loss, that's a big risk. You know, if I have an account of only 1,500 or so, that's a third of my balance approximately. And so maybe I say, I don't want to risk that much, but I don't want to have my stop loss too close either. So then you can say, all right, let me not do the stop loss. Let me do AvaProtect. Let me get through the inauguration tomorrow. We'll go 1 or 2 days, 2 full days protection. The cost of that protection is 1/5 of what I was willing to risk to my stop loss, right? If I put my stop loss down where I had proposed. So for $98 with 10 ounces of gold, you know, if gold even goes $10 the right way, and that's a small movement for gold in 2 days. If it even goes $10 the right way, I've already made back the cost of the premium. Now everything else is gravy, right? It's all profit after that. So, and I've capped my risk for 2 days. I've capped my risk with this coverage. So I might even say, you know what, I can go bigger. At that rate, I can go 15. Okay, still only costing me 150, a little bit less. The potential profit, we've seen gold move $100 in 1 day. If it moved $100 up or $50 up, my profit would be way, way bigger than what I'm paying for the coverage. So if I go to my take profit and I say, okay, take profit at 1900, that's 864 potential profit compared to a cost on the protection of 147. I could take a shot like this with paying for protection for 2 days, 3 or 4 times. If I'm right once with this type of potential profit compared to cost on the protection, then I'm still an overall profit, even if I'm only 1 out of 3 or 1 out of 4. So it's a unique way to trade using this type of protection. I don't think it fits every circumstance, but certainly when you expect volatility, it could be something that would work out well. The pending orders here are also nice. If you look, execute when price hits. You don't have to tell it buy stop, buy limit, sell stop, sell limit. It gets confusing even for experienced traders sometimes which pending order buys from a higher point or which pending order buys from a lower point or sells from a higher point or sells from a lower point. This platform is smart enough to know whatever price you put that you want it to buy from or sell from as a pending order, it'll make it the right type of pending order automatically. You don't have to get confused about which it is. This platform, by the way, is trading on top of your MT4 and your MT5 accounts. So it's the same account. You'll see that any trades you open here will show in your MT4 or in your MT5 account. It just makes it a bit easier having basically a trade calculator and extra risk management tools built into the order window. So it's very nice, and the AvaTrade Go app works the same way. Now, we were here to talk about fundamental news, so let's do that. First of all, on the web trader platform, on all live accounts, if you're only working on a demo, all of these features won't work. They are premium features that actually cost AvaTrade money. So all of these features aren't on the demo accounts, but they're on all live accounts regardless, even if you start with the minimum investment size. So where's the, we've got technical signals. Click on analyst views. There's your signals. You can pick the different assets that you want, the different instruments by category, cryptocurrency, etc. Okay, and here are your free signals. Time and date stamped, 5:06 p.m., 5:04 p.m., 5:02 p.m. Look how many come in. These are live signals coming in, and the timestamp is based on, I think, GMT time, and so, or platform time, which is GMT time. And we're looking at the technical analysis done for you, shows which way the breakout move is expected, the price levels, everything. Okay, entries, exits, etc. Now, in terms of the fundamental news from Trading Central, we could go to Market Buzz, and there are other areas as well. I'll just show you a couple. The Market Buzz brings up instruments that are trending. Why Bank of America Corporation, they had earnings numbers today. Okay, of course they're trending. Look, 111 stories about them, or articles, I should say. You click on it, it brings up your articles. Here they are. You can open the article, expand it, read the entire article. There's your fundamental news right away for different instruments that you might be interested in pulling up recent articles. Okay, and there's a lot there to go through. Real quick, let's take a look at what I found on a quick internet search with fundamental news. The headlines kind of jump out at you. Act big on stimulus. Biden's Treasury nominee, Yellen, tells lawmakers. Okay, she's the nominee. I think she will be confirmed. She was the Treasury Secretary in the past. Looks like she will be again. The markets really liked the way she performed in the past in that position. So I think there's some excitement about her being sworn in eventually here. And also the fact that when she spoke today, and she might still be speaking a bit, but she already spoke some and said, act big on stimulus. So that excited the markets because Wall Street, the stocks, the equities just love free money. big stimulus. And so, you know, not necessarily being handed out to the companies. Some of it might be, but low interest loans, that's still going on. And if the people are getting $2,000 stimulus checks to each citizen, certainly that reverberates up and helps boost the economy as people buy products and go out into the economy with that money. And so that's exciting the markets. It's exciting Wall Street with that headline. We also see crude oil prices rise for the same reason. Stimulus prospects outweigh the IEA gloom. So even though the demand for oil hasn't skyrocketed, it sure helps the situation for oil prices. If you're looking for oil to go up, it helps the situation when there's stimulus added to the number one, to the largest economy in the world, that of the US. So if trillions in stimulus are coming, that can't hurt demand for oil, that's for sure. It certainly could help. And so the oil prices responded the same as the US indices did today. So that's going on fundamentally. This is around the corner though, okay? This is the opposite headline. We see the word outlook or darkens, the words outlook darkens. That doesn't sound good. And so we're looking at, you know, the possibility of these folks that Biden is picking within his cabinet maybe increasing regulations. And Wall Street's not so happy about a couple of the picks that he signaled today will be coming on his team. And it's a couple of folks that they name here where I'm highlighting that are expected to aggressively increase regulations to promote the climate change initiatives, the green energy initiatives, which can hurt some large industries in the US and even around the world with those types of policies. Obviously, it can help some industries as well. The green energy industries could be buoyed by that type of news. But Wall Street doesn't necessarily like the idea of a couple of these folks that Biden is starting to bring on. They think he may be bent to what they're calling the far left or the extreme side of his party. And so he's trying to make maybe all of his party happy, and in doing so, maybe he's spooking a bit of Wall Street. But that I think this will take shape over the next month or so as the realization comes in as to what policies will Biden be promoting and pushing through. Right now, there's still the momentum with this whole stimulus idea. European stocks slip as lockdown worries resurface. And so there's always that, right? There's always that with the COVID virus. It's not under control yet by any means. Still large outbreaks, still lockdowns in different countries around the world. The European Union is no exception. And here we go with kind of a gloomy headline here more for the European stocks and indices. Okay, so that's the fundamental news to have in mind. More of a positive news environment in the US, maybe a little bit of a negative news environment in the European Union. And I think around the corner, some fear hitting about potential regulatory changes in the US that could affect a lot of companies. So that's more of the longer term view for you longer term type traders. So let's take a look at the MT4 here, and we'll look at some instruments and see what's going on. And by the way, if you want to request any instruments to look at, you're more than welcome. Oh, by the way, I wanted to show you. Let's take a look. I mentioned earnings reports. So if you wanted to take a look at earnings reports, where do you look? Well, on a place like here, investing.com, you see here it says earnings calendar. We'll take a quick look at that, and we see what came in today. Okay, you can look at what's on schedule for tomorrow or for the week or yesterday, etc. Bank of America, that was the big one that came in, and you see here, if you point, it says before market opened. So Bank of America reported just before the market opened today, and you see the numbers were split. Better than expected on earnings per share, worse than expected on revenue. Looks like if we look at the chart, you'll see exactly what happened there. Bank of America pulled down because of the miss on revenue, and then recovered because of the positive outlook with the potential stimulus coming. We see Goldman Sachs and Charles Schwab. Goldman Sachs really being the big one here, coming in better than expected on revenue and earnings per share. Okay, so Halliburton, same thing, higher than expected on revenue and earnings per share. So the banks responded positively to those earnings numbers that came in. So maybe we start with Bank of America. Let's take a look at Bank of America, if I can quickly find it, and we'll see. Here it is, BOA, Bank of America Corporation. So let's look at maybe 30-minute candles, and we see this was the start of the week here. Okay, this is the 15th, and then we come through to, and that's even Friday, I should say. And then we come through the holiday, which was a bank holiday yesterday in the US. And then we have the market open. I think we need to go to smaller candles to see it better. Let's go 5-minute. And here we are. So if we get to the 19th, it's here. And this is the first candle, this green candle here. Okay, so the market opened with a spike up and a spike down. And what would you expect after mixed news, right? Better than expected earnings per share, worse than expected on revenue. The market opens, spike up, pull back down, and then what was the obvious direction that these might move after the other earnings numbers from the other banks came in better than expected for both revenue and earnings? That created positive momentum. So it was easy to start to say, okay, let me pick my spots and go in the direction of that positive news, both with stimulus and good news overall from the banking sector so far with the earnings numbers that came in. So you could have found this low point here after it hit once and bounced. It hit the second time. That would have been a spot here to buy from. That would have been a nice opportunistic entry point going with the positive earnings numbers and news about potential stimulus coming, additional stimulus in the US. Now, we can look and say, okay, what about this level? This was an old resistance level. You see here, resistance. It had trouble going above this level and dropped, and now it went above, and now it's on top of that level. So if the positive momentum is there, maybe you say, okay, let me take a buy position on Bank of America. One lot is 1,000 shares, and a 10 cent or 30 cent movement is a pretty decent sized movement. If it went back up to the high that it was at today, we're looking at about a 50 cent climb back up. And so if I do 0.1 trade size, that's 100 shares, 0.1, not slash. Okay, we'll get there. 0.1. There we are. Okay, that's 100 shares. And if it goes up 50 cents, then with 100 shares going 50 cents, that's what? $50 potential profit, right? Or maybe I say I want to do 250 shares. And if it goes up 50 cents, then I'm making $125, right? So whatever the case may be, whatever would be right for you, if you feel like the momentum is there for the bank stocks to rise, then you'd buy, right? That's fundamental trading, basically, going with what you think the news should cause to happen. And technical entry point, there's a little bit of a support level right here, okay? It initially spiked up and dropped from that level. It went up, broke through, and now is above this price level here where there was resistance going into last week as well. So the question is, okay, how much do you want to risk? You can say, all right, let me put my stop loss down about here, just below the support level. I don't have to risk much. I'll put my take profit up here just before the high point that it already reached just an hour or so ago. Okay, now my potential profit is about 3 times what I'm risking. Okay, my potential profit up to today's high that it reached already would be about 3 times, 2.5 times what I'm risking to my stop loss. And in the direction that maybe we believe the fundamental news should maybe move this. Okay. Type okay if you're with me so far. You're hearing me clearly still and seeing my screen all right? All right, great, thank you. I had a couple people that had typed asking if the presenter was here, and they left. So maybe they didn't know how to turn their screen on or something. All right, thank you very much. I've got enough responses. Looks like we're still up and running fine. And by the way, we could look at Citigroup. Okay, maybe you say, okay, Citigroup, does it have a better entry point than Bank of America? Maybe you like that better, right? To go in the direction of the fundamental news. We can look at Berkshire. Okay, it's already way up. Or any number of instruments that are related. Now, if we look at gold, and I think that was an old chart of Berkshire, by the way, that I just had up. It looked like it was still trying to update. Okay, so as we look at gold, we see it's reached a little bit of a resistance on the 5-minute candles, right? But we need maybe to take a look at the larger candles and say, okay, here's a support / resistance level right here. And that's exactly where it is here. Okay, so you see as gold came up, it hit this resistance. It's holding for the last 10, 12 hours, just below that level. If you look back over here, it's the same spot where this hit and held, right? And then dropped back down. So this is an important price level. It's a level of resistance. And that's where gold finds itself right now, trying to figure what direction should it go. What happens to the value of the USD if the markets feel that a large stimulus package is being prepared by the Biden administration? What happens to the value of the USD if more stimulus, trillions of stimulus will be handed out in addition to what's already been handed out? What do you think happens to the value of any currency if you print trillions of them and hand them out as stimulus? Yeah, exactly. That tends to weaken the currency. And so we start to look and we say, okay, this is a resistance level. I don't have to guess whether it might break back above that resistance. If I think that big news could hit, remember we talked about the type of fundamental news that you just don't know when it will be or what it will be, but if the big news hits, whatever instruments are related to that big news could catch a big run. Okay, so I see all of your responses. You're saying, yeah, the value of the USD would decrease with more stimulus because you're printing more dollars and handing them out, right? So the value of the currency gets weakened. That's called inflation. When the value of a currency drops, you need more of them to buy any one thing. That's inflation. What instrument tends to rise as a safe haven from inflation? We're looking at it, right? Gold. Gold tends to rise as an inflationary safe haven. If there's fear that a large stimulus package could cause inflation, weakening of the USD, then maybe gold breaks this resistance and has the ability to make another run back up. Okay, there's no guarantee that that'll happen, but the fundamental news says the potential is there for big news to cause something like that. So I see resistance up here around 1953. Okay, was there not that long ago. These are only 4-hour candles. Look where gold was, 1950 plus. So if this resistance level gets broken, what kind of pending order could you have waiting right here in case big enough news causes gold to break up through this resistance and make some kind of run? Look how quickly gold came down here. Look at that run down. It only took a week to drop that distance. If it breaks back through here, these are 4-hour candles. In 2, 3, 4 days, you could see gold make another run back up. With this talk about large stimulus, which is an inflationary situation for the USD, a weakening situation for the USD potentially. So buy stop pending order. That's what we'd be looking at. Good question. You're saying, is it suitable to have a pending order for trading while the price breaks above the resistance? And the idea would be if it breaks above the resistance, that shows an uptrend. That shows upward momentum if it breaks the resistance. And so that's an example of where you might buy from a higher point. Even though you're giving up some distance on your entry point by waiting for it to go up to buy, you're actually waiting for a confirmatory breakthrough of this resistance before you get in. And so the pending order type, correct, Seth? It's a buy stop. So pending order. Remember I said there are 4 types, and it can get confusing. In the web trader, you would just say buy from and put the price. You don't have to call it a buy stop. In this case, we need, on the MT4, we need to call it a buy stop, put our entry price, which we could say 1857, something like that. And stop loss then would be back below that resistance, back down to, let's say, 1847. So risking maybe $10 per ounce. You could adjust that, whatever works for you. And then the take profit depends if you're scalping and going for a quick jump just to the first resistance level, or if you're in it more bigger term on this whole economic outlook in the US with maybe large stimulus coming and that sort of thing. So I'll simulate a move that maybe you're in it more long term, and so your take profit maybe you put all the way up at 1950. Okay, and there's your pending order. All right, you only get in if it breaks the resistance, and once you're in, you're riding it to a major resistance level up here that it hit not that long ago. Now you might say, well, maybe I want it to break this resistance level up here before I get in, and so that's fine. You can say, I feel better that big news, it would have to break not just this current resistance, but it would have to break this resistance as well. And if that happens, then maybe you're convinced it's going to run up. Okay, fine. And so then your stop loss is back below this resistance level. If it breaks through both of those levels, then you're in from up here. Okay, and that's up to each individual trader. The concept is the same. The exact entry point you prefer, that's up to you. Entry points, exit points, etc. But we know the fundamental news is there for the potential for an inflationary effect in the world's largest economy, the US, because we know eminently the new president is coming in, new administration, with probably very large stimulus on the way. Okay, so fundamentally it makes sense. Somewhere up here where you're convinced it's breaking a major resistance level that you might have a buy stop ready to go to ride the momentum up. Because what comes down fast, you see this, how rapid it dropped? Many times that means if it breaks back into that zone, you could see just as rapid of a rise as you did a drop. Okay, it's not a healthy drop. When any instrument, gold, stocks, anything, when you see a rapid movement like that, many times it's followed by an eventual rapid move back the other way. Not always, but it has a higher potential for that when you have that much energy spent in one direction in such a short period of time. So the potential is there for a couple reasons, both technically, with the technical analysis for a rapid potential climb, and also fundamentally, the potential is there. So I kind of do like getting through not just this first resistance level, but this resistance here before I would get in on this longer term move. okay? But it's up to each individual trader, those exactities. Crude oil, we mentioned that it was climbing, right? Because of the news. There it is. Here's the 4-hour candles. We see nothing but green up, right? Little dots of red and mostly green on the way up on these 4-hour candles. And this was an important price level right here. You see this line? That was a resistance level here that we drew last week. You see the resistance and down. And we said, boy, if the price breaks back above there, you could see that become support. And look, the price went above today. And now you see the wick here. It's acting as support now because that was an old resistance. You get above it, it becomes support in terms of technical analysis theory. So if I then zoom in 15-minute candles, here's that support level. Right there is that support level that was the old resistance. So I could say, okay, that's only about 20 cents down. So I could say, all right, I'll do a fundamental move. I'll buy on oil, I don't know, 250 barrels, and I'll put my stop loss about 30 cents down below this support level. Okay, so why buy on crude oil? Because it's a fundamental news webinar, and there's news and headlines saying that the oil prices are bullish because of excitement about stimulus potentially coming in the US. Because of those headlines, then it makes sense. Okay, let me do my technical analysis and let me find an opportunistic entry point that goes in the direction of the fundamental news. And so it just so happens that this red line is a nice support level that we view from way back here, this old price level that was resistance, and then it breaks above and becomes support, support, breakthrough below, becomes resistance, it gets back above, it becomes support. This is an important price level in the movements on the candles. And so when we zoom in on the smaller time frames, we see there's that level. So I don't have to risk much to get below that. My potential profit then, if I go to, let's say, 1-day candles, there's resistance up here on the 1-day candles. That's all the way up at 53.8. Okay, so now I can go back and say, okay, where do I want my stop loss? I want up here before this resistance, right up around 53.8, 53.7. So now my potential profit is a lot more. What, 5 times, 6 times more potential profit compared to what I'm risking. Okay, and that's based on technical analysis, technical entry points, but in the direction of the fundamental news. Okay, good question, Archibald. He's asking, is there a way to have a stop loss that will follow the trade once it's in profit? And the answer is yes. Now, with one caveat, you have to keep your account connected for the trailing stop to stay active. If you lose internet connection, if you log out, the trailing stop disappears. Okay, but let's say I'm far enough in profit that I say, okay, I want to put my stop loss as a trailing stop. And the idea with a trailing stop is, let's say I put my trailing stop 50 cents back on the oil movement, and I'm $2 in profit. And then it goes up to $2.50 in profit, $3 in profit per barrel. The 50-cent stop loss distance is following that high watermark up. So the stop loss is always that distance away. And if at any point it retraces 50 cents back in this example, then it hits the stop loss. Trailing stops make it more likely to hit your stop loss, but it also preserves profit below that trailing stop mark and continues to allow you to make more profit as long as it doesn't pull back the trailing stop distance from the high water or low water mark, depending whether you're selling or buying. So how do I apply a trailing stop, let's say, to this crude oil? So right click over an open trade. It has to be opened already. Right click over the open trade and you see here trailing stop. And you put it the number of points back that you want. Here, points means all the way to the penny. Okay, all the way to the last decimal. So 50 points is 50 cents back. If I want something more than that or something different than what's listed here, then I can do custom. And I can type in my trailing stop distance and then click OK. Okay, that's it. That's how you activate a trailing stop. And you can leave your other stop loss as well as a secondary backup in case your internet went out, you lost connection, and the trailing stop disappears. Then the standard stop loss is still there to protect you. Okay, you can leave both. All right, you're welcome, Archibald. Okay, let's look at maybe an indice. If we look at US indices, we should see bullishness, right? There's the bullishness. We see a rapid climb with the optimism. We saw the headlines. And by the way, those headlines are out 2 hours ago, 3 hours ago. So there's no reason, even if you got in late, that you couldn't have been buying on the S&P 500 with this entire climb. Okay? That's purely fundamental news driven. Pure fundamental news driven. Easy to read that this was going to climb. So every time it pulled down, here it pulled down to a support level. You see this was support. If price hit, it bounced up. The price came down, buy, right? Buy off the support when the news is good for the instrument. Up it went. Came down to the support, buy. Up it went. If it pulls down again, buy, right? Each time you get an opportunistic entry point where the movement is pushing back down against a support level, when the news is positive, you trust the support level not to break, right? The other side of it is you don't trust the resistance level. So this was resistance here, right? It came up and dropped. So when it came up to this resistance, I'm not selling because the fundamental news says buy. I don't trust the resistance. I think the resistance might break. And in fact, what kind of pending order could you have put so that when it broke the resistance, you would have bought? Again, that's the buy stop pending order, right? Like we did with gold. So there would have been an entry point for a buy stop pending order. You saw resistance and a pullback. Buy off the support level. Don't sell off the resistance because the news says it might break the resistance. That's the advantage of trading with fundamental knowledge about the headlines and what's the news doing. And so you're buying off the support. You're not selling off the resistance. And in fact, you have a pending order up here to buy if it breaks the resistance, because in fact you expect it to break the resistance, but you're just waiting for that breakthrough candle. And this is a classic example of a breakthrough candle driven by fundamental news, fundamental momentum. That's a breakthrough candle larger than the other candles. When you get to a resistance level, it takes momentum to break the resistance. When it breaks, boom, triggers your buy stop, and look at the momentum. That's the idea of a buy stop. Waiting for enough momentum to break the resistance, and then you get in and you ride that momentum up with that breakthrough candle. Okay? Can you still use a stop loss if your lot size is, I'm not sure what you mean, your lot size is 1 to 2. I'm not understanding the question. Maybe rephrase. But yes, you can always have a stop loss on all of the trades you open on the MT4, MT5 platform, regardless of, maybe you meant to say your leverage is 2 to 1 or something. Yes, you can use stop loss for sure. Yeah, there's a lot of news coming out tomorrow as well. Fundamentally, the GBP JPY, let's take a look at that. That'll be the last instrument we look at. What might you do on something like the S&P 500? I think it's going to test the resistance up here too. All right, let me get rid of some of these objects. This is the objects list. I just right click over the chart, go to the objects list, delete all your lines. Okay, so right now it's at a new resistance level. You see the wick here where it dropped. It's at that same spot now trying to break. If it breaks this resistance, you could have a buy stop ready to go from up here. Okay, maybe your entry price on a buy stop is right above that wick right there. Okay, once if it breaks through here, the next resistance isn't until up here. Okay, so you could have an entry price here with a buy stop. Stop loss then would just be right down here. And take profit about 4 times more potential profit to the next resistance level. Again, setting up strategically in the direction of the fundamental news, waiting for a breakthrough to confirm that momentum, and again, in a situation where our potential profit is like 4 times what we're risking. And we only need to be right once out of 3 tries on something like this, and we're profiting. And with the fundamental news on your side, there's no reason why you shouldn't be able to be right at least once out of 3 times on a move like this, and even better than that probably. Okay, so GBP JPY was requested. And by the way, you could look at the NASDAQ, the Dow Jones. They're all moving very similar with today's news out of the US. Okay, so GBP JPY, let's find it real quick, if I can. There it is. Okay, so technically speaking, I see a good deal of resistance in this area and support in this area. So this is the gray zone. This is your zone of uncertainty right here. Whatever the news is tomorrow, if it's big news, this movement will have no trouble either breaking the resistance and going up or breaking the support and plunging. Okay, so you've got huge potential for movement one way or the other. So I think a buy stop pending order up here, just beyond all of this gray zone, this zone of uncertainty. Once it breaks above that, you could ride some momentum up potentially to the next resistance level. The resistance level being this area up here. So you could be patient, wait for any news tomorrow, any talks that could move this instrument. And if it breaks through the resistance, boom, you could be up and running with a buy stop. Stop loss just then back down into the gray zone with minimal risk. Same thing here, a sell stop pending order down here, prepare both. Buy stop up here, sell stop down here. If the news breaks the support, you could see a big plunge down and the next support levels down here. Okay, so huge potential profit this way or this way, either direction. Okay. Paresh, you're asking what seems like maybe a basic question. Explain buy and sell. In retail trading, like you do here with AvaTrade, you don't actually own the instrument. You don't own the asset you're trading on. So, if you're buying on GBP JPY, you're just speculating on the price movement. So you can buy, meaning go long, meaning you think the price will go up, and if it does, you make a profit, or sell, meaning go short if you think the price will drop. So you can make money on a dropping market or on a rising market. So that's what we're talking about with buy and sell. Go long, go short. Make money if it goes up or make money if it goes down. Okay, good question. All right, everybody, thank you for joining. Keep your eyes on the news tomorrow. Get your pending orders prepared now. Get them in on the assets that you think could move big. We went over some of them. Get your pending orders in, get your market moves if it's in the right place. This is what trading's about. Days like what's happening today and tomorrow, the markets should really get moving. All right, everybody, thanks for joining. Bye for now.